Welcome back.
All right, so now that we have kind of like a basic understanding of
Yeah.
asset-based financing,
Mm.
let's get into, like the advantages and,
Yeah.
and how this can like
Right.
really help small business owners
Absolutely.
like yourself, right?
Yeah, let's look at some real world examples.
Yeah, I love a good success story.
Okay.
The guide that you send over highlights like some pretty compelling benefits.
It does.
So I'm eager to see like, how this plays out.
Absolutely.
Yeah.
So one of the most significant advantages, and often like the primary motivation
Yeah.
for businesses seeking this type of financing
Mm-hmm.
is improved cash flow.
Oh,
Remember, asset-based financing lets you convert the value
right.
of those often underutilized assets
Yeah.
into immediate working capital.
So instead of like waiting for customers to pay their invoices,
Exactly.
or like, scrambling to sell off inventory,
Yeah.
I can get that cash right away
Right away.
and keep my business like running smoothly.
Precisely. It can be a real game changer,
Yeah.
especially for businesses facing cash flow crunches.
Right.
It can help you cover those essential operating expenses.
Mm-hmm.
Make payroll on time,
Yeah.
or even seize a time-sensitive opportunity
Right.
that requires, immediate capital.
So like, give me an example.
Sure. So let's say you have a seasonal retailer
Okay.
gearing up for the holiday rush.
Yeah.
They use inventory financing
Okay.
to stock up on all those must-have gifts,
Right.
resulted in a 20% sales increase that year.
Wow, that's fantastic.
Yeah.
What about businesses that have been like really struggling
Yeah.
to get those traditional loans?
That's where the accessibility factor
Yeah.
really comes into play.
Okay.
Asset-based financing often has
Mm-hmm.
less stringent qualification requirements
Okay.
compared to those traditional bank loans,
Interesting.
since lenders are primarily focused
Yeah.
on the value of your assets
Right.
rather than, digging deep into your financial history.
Right.
It can be a more forgiving option.
So even if my business has had a few like hiccups along the way,
Yes.
or if I haven't been in business very long,
Mm-hmm.
this could still be an option.
Absolutely. It can be a game changer
Okay.
for businesses that haven't had the time
All right.
to build up that perfect credit history,
Yeah.
or those operating in industries
Right.
that banks perceive as a bit riskier.
Interesting.
It's all about unlocking the potential within your business,
Okay.
regardless of past financial challenges,
So that's good for entrepreneurs. Yeah.
who don't fit that traditional
Right.
borrower mold.
Exactly.
Now, the guide also talked about scalability,
Scalability.
which seems really important
Yeah.
for businesses that are,
Yeah.
like ready to grow.
It's one of the most attractive aspects
Right.
of asset-based financing.
Mm.
As your business grows,
Mm-hmm.
acquires more assets,
Yeah.
your borrowing power increases proportionally.
So I'm not like locked in
You're not locked
to
in.
a certain amount.
It can adapt
Yeah.
and grow with you.
So the financing can like adapt and grow as my business evolves.
Exactly.
Wow.
This flexibility makes it incredibly appealing.
Mm-hmm. For companies in growth phases
Absolutely.
or dealing with seasonal fluctuations.
Yes, those ups and downs.
Right.
You have the power to access more funding
Okay.
as you need it
Mm.
without having to jump through hoops
Right.
or renegotiate loan terms.
That level of adaptability is so valuable
It is.
in today's world.
Absolutely. Now, in addition to scalability,
Yeah.
the guide also mentions flexibility
Right,
in
yeah.
terms of how I can use the funds.
Yes. How you can actually use the money.
Right.
Asset-based financing often provides more freedom
Okay.
compared to traditional loans, which often come with
Yeah.
very strict limitations.
So I'm not like limited to only using the money for like equipment
Correct.
or real estate.
You have more leeway
Yeah.
to allocate the funds
Okay.
for a wider range of business purposes.
So that could be like working capital,
Working capital.
inventory,
Marketing.
maybe even like expansion.
Strategic expansion.
Wow. That's a huge advantage.
It is.
It gives business owners like myself so much more control
Absolutely.
for how to like,
Yeah.
use these resources
Yeah.
to be successful.
Make it happen.
But even with all these benefits,
Yeah.
there's got to be some drawbacks, right?
You're absolutely right.
Yeah.
It's essential to understand both sides of the coin. One of the primary considerations
Mm-hmm.
is that not all assets are created equal.
Okay.
Some assets might not qualify
As collateral.
as collateral at all.
Okay, so what types of assets
Yeah.
typically don't make the cut?
Lenders have a strong preference
Okay.
for assets that are
Yeah.
straightforward to value
Mm-hmm.
and, if necessary, easy to liquidate.
Right.
to recoup their investment.
Okay.
So if your business relies on
Yeah.
highly specialized equipment
Right.
that only a niche market would be interested in,
Right.
or you have inventory that's prone to quick obsolescence,
Yeah.
those might not be as appealing.
So like a warehouse full of the latest smartphones
Yeah,
is probably a better bet
probably.
than my collection of vintage typewriters.
You hit the nail on the head.
Yeah.
Lenders need to have confidence
Mm-hmm.
that they can quickly convert those assets into cash
Yeah.
if they need to.
Right.
They're looking for liquidity,
Okay.
broad market appeal.
Okay. So asset qualification
Yes,
is crucial.
crucial.
What other potential downsides should we be aware of?
Fees.
Yes.
Fees. Well, asset-based financing offers
Yeah.
some distinct advantages
Mm-hmm.
in terms of accessibility and flexibility.
Right.
It often comes with additional fees
Mm-hmm.
beyond the interest
Oh.
that you'll be paying on a loan.
So what kind of fees are we talking about here?
You'll likely encounter origination fees,
Okay.
which are charged up front
Mhm.
when you initially take out the financing.
Right.
There might be appraisal fees
Okay.
to accurately assess the value of your assets.
Right.
And because lenders are keeping a close eye,
Yeah.
you can expect monitoring fees
Okay.
for their ongoing oversight
Uh-huh.
and the reporting that you'll be required to provide.
So it's important to factor in all those fees,
Absolutely.
like cost.
Yeah, it's not just about comparing interest rates.
Right.
You need to look at the complete picture.
Yeah.
All the associated costs.
To make an informed decision.
Exactly.
And the guy had also mentioned something kind of scary.
Oh, yeah.
The risk of losing those valuable assets.
Right.
If things go wrong.
That's the inherent risk
Yeah.
you take with any type of secured lending.
Okay.
You're putting your assets on the line
As a guarantee.
as a guarantee for the loan.
Wow.
If you default on the loan,
Right.
meaning you're unable to repay as agreed,
Yeah.
the lender has the right to seize those assets
So you get their money back.
to recoup their investment.
That's sobering thought.
It is
I can only imagine how devastating it would be
Yeah.
to lose equipment or inventory.
absolutely, it could cripple operations.
Yeah.
You're right. It's not a risk to be taken lightly.
So it's important to assess your ability to repay
Absolutely.
before you sign.
Before you sign anything,
Yeah, you need a solid plan,
you need a plan.
realistic financial projections,
Realistic projections.
and a good understanding of the terms
Clear understanding
of the loan.
of the loan.
Okay, thinking practically,
Yeah.
are there limits
Yes.
on how much I can actually borrow?
There are typically
Okay.
limitations on borrowing amounts
Okay.
because your borrowing power
Mm-hmm.
is directly tied to the value of your assets.
Right.
There are natural limits.
So if my inventory is worth $100,000,
yeah,
I can't just get a $100,000 loan.
exactly.
Okay.
Lenders typically apply what's
Oh.
called an advance rate,
Okay.
which is a percentage
Mhm.
of the asset's value
Sure.
that they're willing to lend against.
Okay.
They might say, for example,
Yeah.
you can borrow up to 80%
Okay.
of your inventory value.
So in my example, I'd be looking at like an $80,000 loan.
Exactly.
And I'm assuming that advance rate can change
It can fluctuate
depending on the asset.
depending on the asset.
Maybe they're more generous with real estate than
Yeah.
with, like fashion inventory.
You are absolutely right.
Okay.
The advance rate reflects the lender's perceived risk.
Yeah.
They're going to be more cautious
Yeah.
with assets that are harder to liquidate
Right.
or that depreciate quickly.
Okay. This is making a lot more sense now.
Good.
I'm seeing the potential
Yeah.
and the potential pitfalls.
Yeah. You got to weigh those pros and cons.
Yeah, it's not something to jump into
No.
without doing your research.
You got to do your homework.
Yeah.
It's all about careful consideration,
Mm-hmm.
thorough research,
Right.
making sure this aligns with your business goals
And my risk tolerance.
and your risk tolerance.
Okay.
It's a powerful tool,
Yeah.
but it needs to be wielded wisely.
Okay, so we've covered a lot of ground today.
We have.
From like the basic mechanics
Yeah.
to the advantages and disadvantages.
Mhm.
We've seen how it can be a valuable tool
Yeah.
for businesses facing specific challenges
Right.
or looking for opportunities.
We've done all of this.
Yeah,
Keeping your specific interests in mind,
right?
using the guide you sent
Exactly.
as our roadmap.
But there's still more to uncover
There is.
when it comes to like actually getting this financing and making sure you get the best deal.
Absolutely.
So that sounds like a perfect segue
Perfect segue.
into the final part
The final part.
of our deep dive.
Let's do it.
All right, so when we return,
Yes.
we'll walk you through the steps
Okay.
of securing asset-based financing.
Great.
From finding the right lender
Yeah.
to navigating those terms and conditions.
The nitty-gritty.
Stay tuned.